when your physical body is working, your mind is also connected to it. It's not separated from your body. So when you do physical exercise, you become stronger mentally also.
Sovit Manjani, welcome on the podcast. How's it going today?
It would be fun for me at least, like sharing my experience with you and others would be great.
Awesome. Pleasure to be here. So you are in India. I'm in Bangkok right now, which is pretty not that far, quite close compared to the US or something. But the reason why I'm interviewing you today is because Michael Tama connected me to you. He apparently went to your trainings or something and he learned a lot from you. So I'm curious to talk kind of hear about your story, things you've done in the past, and I hope that our traders can learn a lot from your story, of course, and your lessons. So let's kind of go back and track a little bit. Can you tell people how you began trading? What was your first moment in trading in the first place?
My first trading was in 1995, somewhat, when I had joined as an accountant at a group of investors called Suburban Investors Club at our area. It was a group of around 100 people who used to trade within themselves. At that time, uh, there was a system of odd lots, if you know about it. Okay, people used to like, there were lots of 100 per share, right? You cannot sell less than 100 shares. So those who have less than 100 shares, they will like trade within themselves for a small profit, which was above the market price. Okay, and they will make it a lot and then sell it. So that is what my job was, to make a lot and sell it in the market for them. So I started trading for myself also at that time.
And how did you learn? Did you learn at your job, or do you have like any studies or any coach, any mentor that helped you to learn?
Yeah, actually, I left the market in 1997. So I was there around 2 years at that time. And then I came out of the markets totally. And then I re entered in around 2007. You must be knowing, like 2008 was a big bear market and I was hit by it. Initially, I had some luck in 2007. But then 2008 came in and I was hit badly in that bear market. So I wanted to learn and how to like make money in the market, because I've lost in 2008. So I tried with fundamental analysis because I was an accountant. So I've been reading balance sheets. I know how to read balance sheets. But that didn't work, because like some part of it is always like is not very true. Okay. And I always knew that. So it did work for me. Then in 2012, I actually started learning technicals. That was and when I thought of learning technicals, I thought that I should then directly do the highest designation possible in technical analysis, which is CMT. So I directly started with CMT, and I started reading the CMT books of level 1. Then by 2013, I was able to complete all three levels. I was lucky that all three levels I was cleared in first attempt only. But still, by that time also, I was not profitable by trading, especially in options and futures, because options and futures have leverage game, and I was not able to control my losses at that point. And I would have entered good, but like my exits would have been without any stop loss, and like all the blunders what we can do as an initial trader, I did all of them.
Interesting. Some people say that the technical analysis studies are a little bit too like based in theory. Did they help you a lot in trading, or did you have kind of learn to apply them also after on your own?
Initially, it didn't work for me. As I said, technical analysis, like I tried a lot of techniques of technicals, but it didn't work for me, because like the major cause I would say would have been mental strength and mental fitness. Because if you buy a share or sell a share, immediately it will not move in your favor. Okay, it may remain sometimes sideways, or may fall initially and then rise. So if you are afraid, you will exit in that fall, and it will not work out for you. Okay, so that kept on happening with me at that time.
And I know a lot of people might be facing this right now. So, what would you tell them to do in that case? What should they work on? What should they apply?
What I would say is that take the systematic path. whatever you think works in the market. Say suppose an example, a moving average crossover or anything. Okay, take it and see it, like if you cannot code, if you can code very well, okay, if you cannot code, then see it at least 100 200 charts and see whether the theory actually works for you in the time frame which you think it works. Okay, you have to practically check it. Okay, you cannot put your money just by like because in some book it is written that moving average crossover is profitable. You cannot put money on just because somebody has said that. You have to test it yourself, you have to experience it yourself, see it on the charts, or better if you can code it and backtest it on at least 100 1000 charts, at least generate 1000 2000 trades, and then see whether it is profitable or not. That is most important. Without that, you're just putting your bets on like you're just gambling, because you don't have any knowledge, you don't have any evidence that it will work or it will not work, and you will keep changing your methods. Sometimes you will use moving averages, sometimes you will use RSI, sometimes you will use MACD, sometimes you will use statistics. So you don't have a fixed methodology, then it will not work for you. You will take 4 5 trades in one methodology, it will not work, then you shift to another methodology. 2 3 trades will go right, 2 3 trades will go wrong, again you will shift to another methodology. So this will not actually work for most of the people. So stick to one methodology, test it, and if it is profitable in the backtest, then you can put your money. And another thing, important thing to understand is that even in the backtest, if it shows that it is profitable, that rule is profitable, in future whether it will be profitable, it's not known. But what will be the advantage of backtest is that you will know what things don't work actually. So if you're testing 10 methodologies or 10 rules, you will at least know that 8 doesn't work. So at least you will not put money on those 8, and you are now putting money only on two things which you think may make money. Out of that, also one may not work. Okay. So it will not tell you what will happen in the future, but at least it will tell you if it has not worked in the past, most probably it will not work in the future also. So that is important to understand. Don't expect that it will work in the future also.
That's a good point. I think most people use the backtest to make sure that it's going to work in the future, but they cannot know that. So I think that aspect of looking if it's going to erasing what's not going to work, then that really helps. That's really awesome. I know you're a really strong systems trader, so you create systematic strategies. How did you go about creating your first strategy?
I started it in 2015. What I did was that I was by 2015 I was in a part-time job as an accountant. Okay, and it was of course not working with me. So I thought that I should leave the job and make be a full-time trader. Then only I can be profitable, because like if I'm concentrating on one thing, then only I can be profitable. If I'm focusing on two things, I may not be doing justice to the field of what I prefer to do. So I left in 2015, and I started trading, but that also didn't work because by that time I was not systematic. Again, I was doing the same things. I was like uh, doing trading based on a methodology, but then I would not know whether that methodology actually works or not. So in 2015, I started to learn coding with the recommendation of one of my friends. I started to learn coding, and it took me around 6 to 9 months to make my first system. The first system which I tested, back tested, didn't work actually. Okay, this was the second system which I started to work. That was actually which worked, and my methodology was simple. Like in the books of CMT, I've always read that you have to be with the trend, right? So I took some rules of for a trend, and then it is also written in the books that you have to be with momentum. So I also put momentum into it. Then you have to be the strength of the stock should be also be strong. Okay, so I put an indicator of strength into it, and then the short term trend should also be in your favor. Okay, so I combined these 4 5 things which was there in the books. I combined them and made a model out of it. So that was my first system, but it took me almost like 6 to 8 months to make the system.
Do you have any ideas for people that don't know what to put in their system? Like they want to create a system now, but they don't know what to put in it.
So luckily, because of the knowledge of CMT, I had some idea what to use, but I was not sure whether that will work or not. So there was, as I said, my first system actually didn't work. So and actually, what the problem was, that that system was based on Bollinger Bands. Okay, actually that system was profitable, but the losses of the system was so big that I cannot handle it. I won't be able to handle it. So the capital would have been eroded, although it was profitable, but the capital would have been eroded if I would have continued to do that. So there can be some systems who can be which can be very profitable, but being profitable is one thing, and a system which is doable is another thing. People search for profitable systems, but what they should also do is that they have to test whether that system is doable. You cannot emotionally trade a system which has a drawdown of 50%, 50-60%. Okay. Emotionally, you will not be able to handle that system. Most of the people will not be able to handle that system. Instead of that, search for a system which has a drawdown of or make a system which has a drawdown of near about 20%. I'm talking about a trend following system. There can be another system which can have drawdown of only 5%. I'm not talking about that. So do something which is, although it may have a lesser profit, like it may just generate 30%, 40% returns, but its drawdown is 20%. So you will be emotionally be able to run that system when there is drawdown, because drawdowns are going to come. There is no way that you can get rid of drawdowns. There's no way that you can get rid of losses. The only thing what you can do is reduce your losses and keep it to your emotional level, that where you are comfortable with those losses. This is very important.
So let's go to today. What is your trading style these days? Like what time frame do you trade? What kind of markets and how do you trade them?
So I still trade that first system, still that is running, although we have upgraded it to some extent. So basically, it's the same thing that we see the trend. My basic style of trading is that I see the trend and then I buy or I sell based on retracements. Although we also have a system which runs on breakouts and momentum, but the advantage of this retracement system is that its drawdowns are lesser than momentum systems, because you are already buying at some point of retracement. Either it is sideways or it is a little bit down from its high, so it's not that volatile at that time. And if your stop loss triggers, then also your losses will be smaller, because it is any which is closer to your stop loss when you are entering. Okay, so these systems have lesser profitability than breakout systems and momentum systems, but the risk adjusted returns are higher for these systems generally. Okay, we also run a breakout system. In those systems your profits are higher, but then your drawdowns are also bigger, especially time wise. Also they can take a longer period to come back. So and trade wise also, your series of losses can be much bigger in a breakout system, because there can be a multiple false breakouts at times. So my basic idea is that, but also have systems which are like contra trend. So contrast is what I have found with my experience of last 5-7 years, whatever I've done, is that all types of systems work, whether it be mean reverting, whether it be trend following, whether it is contra trend, whether it is option selling. Everything works. You have to have the mindset to run it, and second thing is that you should be okay when there are drawdowns, and your losses should be small in all cases. Your system should be fast enough to exit and limit your losses, both in terms of time and in terms of money. Because at times, if it's not a big loss in terms of money, but if it is taking a very long time to of a loss, like your drawdown is there for 6 months, 8 months, then it will be very difficult to you for you to run it and being in a loss of for around 8 months or 10 months. Okay. So time wise also it should recover fast, and price wise also it should not give you too much of losses.
One thing I find funny is people that say, "Oh, trend trading is the best," or "Oh, breakout trading is the best," but all these types they all have their own goods and bads. So I think the best thing is to combine both. It's to combine a few of them and trade them together, so that you take the best of both, of all of them, basically. So now these systems are all coded and they all run by themselves, or do you have to take this manually within the system?
They are all fully coded, but we need to monitor them for sure, because at times there can be malfunction, there can be internet breakdowns. They all are running on cloud servers, so there's less chance of happening such things. But we always keep we have kept dealers who are constantly monitoring them, so none of the system is left alone for even a single second. Okay, but they are running automatic, and in some systems they are also manual systems also. That is, the signal are generated by the system, but the order punching is done manually by the dealers, because these are like very very slow systems. So it will it will give you like hardly 4 5 trades in a week. So it doesn't make sense to run the to put the infrastructure on those systems. So keeping a dealer is, and any which is we have dealers, so it is much cost efficient for us to run them manually.
Okay, interesting. And do you have any times where you turn off the system completely, like when there's news or something of the sort, or maybe like now with the virus, there's been like different times in the market. Do you turn off your systems or do they keep running?
No, we don't try to shut down systems at any point. Due to this lockdown, when this was announced, at that time we had to stop it for around 4 5 days, because the infrastructure was not ready for that. Okay, so it was not because of any other reason, but the office had to shut down, and we had to change the infrastructure. So we had, and any which is in the lockdown, before the lockdown there was a big crash, and we had benefited from that crash. We had uh, made some profits of that crash, so we were not worried about it. Okay. So we had kept, and generally after a big profitable trend, we generally systems lose money, so that was not an issue, and it actually didn't hurt us uh, at all. In fact, we saved some money onto that, but it was totally because of the infrastructure issues.
It's kind of tricky to turn off a system. You're right, because when you backtest your system, you test everything. You don't like test and turn it off sometimes. So I think that that's a good idea. And how often do you kind of fine tune your system? How often do you readjust and tweak them?
That's a very interesting question. Actually, I had a very bad experience regarding this. Um, the system was one of the, like my first system, which I was talking about. That was running fine, and then it had a bad phase, obviously. So we thought of upgrading it. We thought that it needs an upgradation, and we thought of upgrading it, and we upgraded it. But as soon as we upgraded it, that system, it we did it after around 1.5 years or so. The new system. So see, this old system we already had a drawdown, and the new system, not the new system, the new version went into a drawdown, and the old system actually recovered from the drawdown. So we had to face the drawdown of both the systems. So it becomes extremely important for you when to you tweak that system. So what I would recommend doing is that, and what I do now is that I'll make a version of the current system in advance. I'll keep running this system, let it come out of the drawdown, and then deploy money, and let this system come into some sort of drawdown. It may not be a very very big drawdown. It can be just a 4 5% drawdown, but let this system come into drawdown and let them recover something, and then shift to this system. So what will happen is that the new system is also tested in live. We are running it live, but we are not taking trades onto it. We are still taking the trades on this older system, but we go it live when there is some drawdown, and within this period, if there is some coding bugs, that also will be known. So it may take around 6 months of time that you run this system without taking actual trades onto it, and then shift to the newer version.
That's a good process. I know like people that when they have a system, they want to go right in and trade it right away. But sometimes errors appears and things come up, and if you start to tweak it and then tweak it all the time, then it takes a while and you make mistakes and your results are not as good as if you were to correct it first and then trade it after. So that's a really good point. Yeah. You mentioned that you were a big fan of meditation. So how does that help you in trading exactly?
It helps a lot, I would say, because I don't think I would have been a good trader if I was not doing meditation or some sort. Say by meditation, I would say that every trader should do that. Why? Because it keeps you calm and composed. At times there will be losses in your trading methodology. Whatever is your methodology, it doesn't matter whether you are an intraday trader or a long-term investor. Each system or each methodology or each setup will have drawdowns, will have losses. So how do you come up with when those losses are there? Okay, systems and markets will hit you hard, but how you come back from that is very very important, and you can come back if you are mentally strong. So meditation it's not about meditation, it can be anything. You can do yoga, you can do swimming, you can do gym, you can do football, basketball, any types of sports is like a meditation. Because what happens is that when your physical body is working, your mind is also connected to it's not separated from your body. So when you do physical exercise, you become stronger mentally also. Because when you are practicing, you are doing swimming or anything, each time you do that, you want to reach to a next level, right? Each time there will be times when you will not be able to do as per your target, whatever target you have set in that, maybe in gymming or anything. You may not be able to do that, go there. But initially, if you keep practicing, if you're not given it up, you will reach there. So same thing will happen in your trading also. At times you will have setbacks. You don't have to give it up. You have to keep trying, and you will reach to the levels or target which you think you should reach. So they all help. They are interconnected. Your mind and body are interconnected. You cannot separate them. Do any type of exercise, but for a trader, it is very very important to do some sort of activity like that in the morning, in the evening, in the night. Whatever time you feel like, whatever suitable for you, you do it. But I will always suggest all the traders to do some sort of exercise. And the meditation which I do is called Vipassana meditation, and I first heard about it in 2015 when I left the job, as I said, and uh, I became a full time trader. At that time, I had understood that sort of meditation is required for me to be successful. So as soon I heard about this thing, I joined a 10-day course of Vipassana. It was in very close to my place. It's around 100 kilometers from here. Okay, it's a 10-day course where you have to be quiet for 10 days, and in a day you have to meditate for at least 10 hours. So, and you cannot talk. You cannot use mobile phones. You cannot use any sort of gadgets there for those 10 days. So you're out of the market. You are out of the world. Nobody can call you. You cannot receive any calls. No, you cannot call anybody in those 10 days. It's a total separation from the world, and it's a extremely good experience which I got at that time. And I would say I was very lucky that I did that and it happened to me.
That's interesting. Did you practice meditation before that retreat, or did you start at the retreat?
I did some sort of meditation before that. I tried different techniques of meditations before that, but they didn't satisfy me. This was something which actually I thought that yes, this is powerful.
Interesting. That's something that sounds really interesting, and I do some meditation myself too. I've never started a retreat though, so that could be interesting for sure. I think we discussed a lot of different topics, but are there any things that we didn't talk about that you would like to mention or touch on that we didn't really mention so far?
What I would like to talk about is that when you are trading, you should have all these four important pillars of trading are there, which I think and which worked for me. The first pillar is your mental setup. which you can get through meditation or any sort of other exercise. Okay, which is extremely important. The second pillar is the knowledge. Okay, you can have knowledge in any field, whether if you like fundamental analysis, you can do fundamental analysis. If you like technicals, you can do technicals. If you are quantitative trader, be quantitative. You don't need to change your style. If you believe in statistics, do that. But out of these, anything anyone you can do, or you can have a mixture of it. Okay, you can have a techno funda model, or statistical model with some technical indicators with it. That doesn't matter, but first acquire knowledge of it. The knowledge is most important, because on that knowledge only you can build other things. Okay, after you acquire knowledge, you have to have a methodology. It has to be a method. You don't need to code your method. It can be a rule which is manual, and you can and you are like, you have a checklist of it, and each time you see a trade, you click on the checklist, and check whether all the rules have been met. You don't need to code everything. It's okay that you don't code. Okay, but have a checklist. It has to be a method which is proved by either by backtest manually, or by coding, or by, if you really believe in it and you have experienced it for last 4 5 years, then it is fine. Have a checklist of it. And the fourth pillar is, you need to have some sort of trading buddies, um, uh, with whom you can share your thoughts, because at the time of drawdowns, you and there will be mental stress. This business is not free of mental stress, so you can share with these buddies, and they can guide you at times. Okay? And you will be buddy for them. Okay, so you, at times, at their bad times, you can help them. You can discuss their issues, um, and there should be a total faith in the buddies. Like, it can be a small group of 2 3 people. It doesn't need to be 10 15 people, but find out some people who are in the same field, and who can share you with you some sort of their experience and their knowledge at that time. That at those times is the most important time when you need some support. These are extremely important things which you may need to do when you are doing trading.
Totally agree with that. And for me, the checklist has been huge. Going from like being unorganized to using checklists made a big difference for me. So that's a good point. Very good point. So where can people find you if they want to connect with you or reach out after this podcast?
I am available on LinkedIn and Twitter, and my ID is Sovit CMT. Anybody can connect me through them, and like my email address, if you want, I can share with you the email address.
Perfect. We'll put this in the show note and below the video on YouTube, of course. So, Sovit, what are your goals for the future?
So basically, I'm a little greedy. So I have 3 goals. Okay, I don't know whether all 3 of them will be fulfilled or not. The first goal is to go deeper into the meditation, vipassana meditation, and um, mature get in the field of meditation, because still I'm not reached to that level which I would like to reach. Okay, so at times I still have I don't have control over my emotions. At times I still get angry. At times I still get fearful. Okay, so I want to mature more in that. Not only because of trading, but it helps you in your life also. Like, ultimately, there's one universal law, which is that life life and in trading, is that everything is changing. So there's no permanency, or nothing is permanent. Okay, it keeps changing, and we need to understand that there's always uncertainty. In trading also, there is never certainty. When we trade, when we do, those are the worst times I have been seen, when I was very certain. Whenever I was certain, I have lost. And whenever I was not expecting profits, that was the best time when I actually made a lot of profits. So uh, don't have biases, don't have don't be certain at times. Trading and life is always about probabilities. Okay? It is never certain. Anything can happen anytime. So that is one thing which is important for me. The second thing, what I would like to do is that I had been to this learning curve of being a systematic trader, and I would like to reduce this curve and pain for other traders by whatever means. I want to share my experience to other traders so that they don't go through the same pain and same I started, as I said, I started in 2007 and I was profitable in 2017. It took me almost 10 years to become profitable. I would like to reduce this period for most of the traders if I can, if it is possible. I would like to reduce that by any means. I don't mind doing whatever means is required. And the third is my first love has always been music. Okay. So I would like to go deeper into that. I've never been able to um, devote time for it. When I was very young, when I was in school, I used to love music at that time. I still love it, but I have not got enough time to put that more time to it. So I would definitely like to do something in the field of music as well. It doesn't mean that I need to be famous in that. Okay, I just want to do to satisfy myself, to fulfill my habit and my hobby basically, and my passion.
Very interesting. I also like music, so that's quite interesting for sure. Awesome. So, Sovit, I want to ask you one last question, which I ask usually all my guests for this podcast. And the question is, if you could give people one sentence of advice on how they can become better traders, what would that one sentence of advice be?
Well, as I already said to you that respect uncertainty. Respect uncertainty. Anything can happen. Don't be certain. Don't be biased. Okay. No matter how good your system is, there can be something which may happen. Whether you are with the trend or you are against the trend, still something can happen and you can lose. Okay. So it doesn't matter. Second thing is that cut your losses. Like Ed Sikota always says, cut your losses, cut your losses, cut your losses. Then only you have a chance, right? So it is very important. And one big trend can pay for them all. Okay, so once you get one trend, you will be able to make money of whatever you have lost in those losses. You will make up. But your first is to cut your losses. You cannot afford to have a bigger loss. You have to learn to cut your losses. For initially, you will the first step will be that you will not you will be a no profit no loss trader. If you have reached to that extent, you have at least one I would say 30% of your battle. Okay. And the second step will be to become profitable. That will be another 30%. And then it will come to position sizing. Then it will come to leverage and risk management to reach to that 100%. But the first, the most difficult part for I would say 90% of the people is that they are not able to cut their losses. So you have to cut your losses because, as we know, that if you have lost 25%, sorry, 20% of your initial capital, you will have to make 25% to come back to your original capital, right? If you have lost 50%, you will have to make 100% to come back to your original capital. So if you don't cut your losses early, you will never be able to be a successful trader. There's no way that you can be a successful trader if you don't cut your losses. So the first step for any trader should be to cut his losses. There's no alternative to that.
Very good advice. Good advice. Thank you, Sovit. I appreciate it. And I'll hopefully talk to you soon.